Welcome to TradeView Live. We have a special edition today with a special guest, which we're so excited to have join us. We'll introduce him in just a moment. Before that, our quick disclaimers. I'm Ben Tracy. I'm the host. I lead strategic business development at Vizion, joined here by my co-host, Kyle Henderson, our CEO and co-founder. Kyle, for any new attendees who have been patient through this technical difficulty, let them know, what is TradeView? What are we here to talk about?
Yeah, thanks, Ben. So TradeView and TradeView Live is a product, and these live streams we do, sharing lots of information as we look at the containerized freight industry in far more detail than you may be used to. TradeView is a product and platform offered by Vizion, and we're able to see 57% of all global container shipments, 3 times more than we think any other platform out there. And we've profiled 1.5 million companies. We do 90-day forecasts. We have supplier and product networks mapped out. And of course, there's an AI researcher there to help answer to your questions.
And where does this data come from? Again, per the slide, the disclaimer, what's so unique about the information we're looking at inside of TradeView?
Yeah, so once we get into the presentation here, we'll be looking at analysis from data collected across 270 different data sources that Vizion has built direct connections to over the past 5+ years. Those vary from ocean carriers, freight forwarders, booking platforms, AIS data, rail carriers, customs agencies. We bring it all in, we make sense of it, and then we provide it great detailed intelligence data about what's happening in the trade, help and solutions for supply chain planning, and then visibility into logistics performance.
And something unique in what we'll talk about in some of the trends is the leading indicator, the information out about booking activity, about scheduled arrivals, about what will be happening in the weeks and months to come. How are we able to have such a leading indicator, or how can we forecast these trends in global trade?
Yes, a detailed forecast is a very powerful differentiator of TradeView and market. And primarily that's done by leveraging booking data for containerized freight. And so this gives us wonderful insights into the trends in different industries, what's going to be arriving where, when over the next 90 days, helps us understand volumes, trade flows, et cetera. Because it's all built on the shipments inside individual bookings, it's a very, very high resolution forecast data set that we deliver to our customers and partners. And speaking of partners, maybe this is a good time to introduce our special guest.
Yes, thank you for going through the disclaimer. And Eric with the Journal of Commerce needs no introduction, but senior technology editor, an expert in all things logistics technology, and certainly been reading a lot of your commentary and what's been happening since April 1st, what's been happening really in the last 5 years, and how supply chain stakeholders are responding in terms of their needs for different solutions, different data points. But why don't we just start with introduce yourself, Eric, and what's been your perspective, in what's happened in the last 4 months?
Yeah, so thanks, Ben and Kyle, for having me. Really honored to be on the show. As you mentioned, I am a lifetime journalist or career journalist, focusing on the logistics industry for the last 20+ years and focusing specifically around tech for the last 10 or 12 years. Actually, it's more than that now. I keep forgetting to add years. Since about 2011, honestly. Up until 2025, I spent 99% of my time covering technology, sort of purely around technology and data. This past year, I've been thrown back into the world of trade and trade compliance and tariffs and regulations on that end for obvious reasons, I'm sure, for everyone tuning in. So it's been interesting to jump back into that world. That was something I used to cover a lot with a previous publication that I worked for. There's definitely overlap. We've seen a ton of technology kind of emerge over the past year or so, focused around kind of getting people's arms around what's going on in the upheaval in terms of trade policy. So makes perfect sense. And yeah, just been a very, very interesting time. I think to your question about perspective over the last 4 to 7 months, the most interesting data point I have is a bunch of trade compliance experts saying there's been more stuff that's happened in their world in the last 7 months than they had seen maybe in like 2 to 3 decades prior, right? The volume of change has been, to say it's historic is like very underplaying it. It's just a barrage of trade regs. I actually saw something this morning on LinkedIn, a trade compliance person saying there's been 23 HTS code update alerts from CBP in the last 6 months. Normally they get 1 or 2 bulk batch updates a year. So there's been 23 in 6 months, in 39 weeks, basically.
Yeah.
Just to give a perspective.
And that was kind of where my question was going, is how unprecedented is this level of disruption when we think about the Red Sea crisis, when we think about what happened in 2020 and in 2021. Again, the shifts and the level of uncertainty, is the degree of uncertainty higher than ever before? And are we at a point now where it's become the new normal, where companies are really expecting anything to happen on really a weekly, maybe even a daily basis, as you said, with the way HS codes are given an exception one week, not given an exception the next week? The tariff is this, the tariff is that. Yeah. How would you put this in the scale of what's happened? Let's just go back over the last 5 years. Are we at a severity in terms of the level of disruption and uncertainty that we haven't seen before? So
it's a great question. I think while everybody's hair was on fire during the pandemic, as you think, they might not have thought about it in this way during the pandemic. But if you ask those people, like, what's different this year versus, say, the height of the pandemic, where it was just like everything seemed to be on the verge of breaking and freight rates were crazy high and all that, there was still some like definable things that people could, the foundations were there. Like, we know we have to move from this point to this point. We just, there's a bottleneck in doing so. So we can plan around that, or we have to pay extra to get cargo from point A to point B. I think the difference this year is you have, like, the foundations are a little shakier, right? If you're talking, because it's a supply chain issue, it's not a transportation and logistics issue. It's a, where do I source from? How does this affect like cost of goods, not just a component of cost of goods, like, but the entirety of their supply chain. But I think that's the thing that's been really hard for them to cope with this year, is just, like, one of my favorite movies that my son made me watch a million times is the Ninjago Lego movie. And if you remember, Garmadon, anyone who's seen it, grew up in the temple of fragile foundations. Like, that's what I feel like everyone's listening or living through right now. So
yeah, the temple of fragile foundations. I like that.
A quick comment there, Ben. I think if the question fundamentally is, when was the last time it was this bad, I think you might have to go back. Putting my history professor sweater on for a moment, I think you might have to go back to before containerized shipping was even a thing. It's like back in like the tariff situations of the great power struggles of like the 19th and 17th, 18th century type of thing. That's the last time it was this like crazy and complex, and that was literally a different world.
Yeah.
But to speak about the world, maybe we start rolling into some of the insights into.
Yeah, let's start with our high level views. Again, it's been almost a little over a month since we last met. So over the last, let's say, 4 weeks, what's happened in terms of the macro views that we typically start with? So global booking activity for U.S. imports, and again, this is based on the week in which the shipment was booked, and then specifically looking at the China to U.S. There's been a lot of developments, a lot of chatter, not a lot of finite details in terms of China to U.S. trade policy in the last 4 weeks. So I was curious to see how this would look if we had started to see a sort of rebounding, a newfound optimism or a newfound amount of demand for China to U.S. bookings based on the indication that there may be a finalized deal, other than just a continuation of this 90-day pause. Keep in mind, the current 90-day pause is set to expire, I believe, in the middle of November. So
August was the last one. So middle.
Yeah, we're approaching that extension again with no concrete permanent path forward in terms of what the tariffs will be and what that that final trade agreement will look like. But let's comment a little bit on what we're seeing here, Kyle. So global bookings starting to tick upward year over year. U.S. import bookings, kind of where we left off on our last TradeView live session, relatively flat. And then China to U.S. bookings continuing to really
That's
plummet.
the most interesting number to me, seeing that year over year, it's only down 4% the week of September 15th. I'd be curious, like how that's syncing with like different seasonality trends, et cetera. Is this about needing to get maybe some last minute freight in really before the holidays, and we don't really care where it's coming from right now, type of thing? I'm not sure how to explain that. That one seems interesting, especially seeing that it was pretty much down 20% every single week year over year for the 3 weeks prior.
Well, Eric, would you think that in comparison to last year, when we look at the middle of September, was that sort of the tail end of peak season? Like peak season was pretty much over at that point. Correct me if I'm wrong, because I know it came a little bit earlier in 2024. So could that be why we're not seeing as much of a decline year over year?
Yeah, I mean, this is without like necessarily knowing all of the minute factors contributing to this. This is a case study of like 2 years with upheaval, but different types of upheaval. Remember, the port strike was about to hit end of September. So as that approached, the messaging to everybody was get your stuff in early. So by the middle to late September, most people were not pushing it that far. They were like, let's get it in and we can figure out what to do with it once it's
that might fit better, because if you look at the week over week change, China to US bookings, it's just dropping each week, right?
Right.
So
yeah. So and this year the inverse might have been people waiting, enough inventory, but at some point you have to hit that sweet spot of getting it in early enough to actually hit holiday sales, but not too late that you miss some window where China tariffs skyrocket again. So yeah, that would be my best guess in terms of why we're seeing that.
I'd be really curious comments from the audience about their interpretation and reading into this as well, because I'm sure the crowdsourcing might come up with some good insights that aren't coming to the top of our aging brains.
Reporting is basically just an old-fashioned word for crowdsourcing. So
But we can go into a little bit more depth on China to US weekly bookings, just looking at, again, that seasonality, how much 2025 looked like 2024 until roughly that week of week 11, week 12, which would be right around April 1st, Liberation Day. We saw that tremendous plummet, which then bounced back tremendously as well, but only for about a 2 to 3 week period. We were expecting that bounce back to remain close to 2024 levels, but we've been consistently, as you saw in the previous table, 20 to 30% below 2024 levels, and in fact, a little bit below 2023 levels as well. Consistently for the past several months, we're now at a 2-year low for weekly China to US bookings. But yes, I think that's an interesting point in that a year ago, we were seeing a surge to get freight in before October 1st. And because of the lack of certainty, sort of a dampening effect now, and potentially enough front loading that occurred where shippers can continue to wait and see. They potentially don't need as many containers brought in for the coming holiday season.
Yeah, I mean, if you see the economic sort of picture and outlook, I think most companies, even with the Fed cutting rates a little bit, which most people are focused on what that means to mortgage rates, but people in supply chain are worried about things like inventory carrying costs and storage and all that stuff. So it's not yet low enough for it to influence anything along those lines. So they'd rather be a little under inventoried than over inventoried at this point.
Yeah. So we also wanted to break down a little bit on different sectors here. So Kyle, this is looking at the HS code, correct, in the bookings, how the goods inside the container are described. and then we're grouping it by these high-level categories in terms of type of cargo.
Yeah, and it's, some of these, all of these are coming from China, but, in terms of these types of products that are especially suitable for containerized freight, like furniture and flat packing, that is actually made for containerized freight, you might say, or whether it's the new generation of mattresses where you can essentially vacuum pack it and get it tiny, and you have a much better economies of scale with freight than you used to in the mattress industry. I mean, you used to have to do mattresses actually far more locally if you would really go back. But this is, generally that decline. It is interesting to see this uptick specifically in furniture that was happening, this like week 31 or so, to kind of get some of those inventories back, a little bit with toys as well. But it's also interesting to see like plastics, machinery, electrical equipment, like being relatively flat in its response. I'm kind of curious about that, Eric, from what you've been seeing. Why would those categories from your perspective be as flat as they are?
Well,
not,
I mean,
with
with manufacturing, kind of in U.S. manufacturing, ironically, sort of in the doldrums this year, since that's sort of the chief goal of the tariffs. It's not a huge surprise to see the components and the things that feed into U.S. manufacturing sort of subdued in terms of volume. I mean, I would see that furniture spike sort of that's correlates a little bit around August, if I'm not, post August, I'm not mistaken. So you probably saw a lot of furniture companies say, yeah, we don't have a ton of demand, but we get another 90-day window to push as much, the inventory we need. And now we're starting to see, okay, we got everything we need. Now we need to sell this stuff. So yeah, but quite interesting. And like that sort of flat line on the industrial side of things does not surprise me at all.
Yeah, to your point with the furniture side, certainly trends in furniture change, but it's not like fresh fruit shipping or anything like that. It has pretty good shelf life. You can hold that inventory,
Sure.
Depending on your inventory cost situation, you can hold it for a little while if you need to.
I still go into furniture stores that look like they could have been cutting edge in the 90s. So yeah, for sure. Some of them are quote unquote timeless.
So this next table was based on some audience feedback we got. Eric, was pretty interesting to look not only at United States as the recipient of Chinese goods, but all the other top destinations for Chinese exports. How have those trended? Specifically looking at January through September, year to date in comparison to 2024. And so what this does is it really this table ranks, obviously the US as the primary destination, Brazil and Mexico very close to number 2, and a list of really the top 15 here, almost all of them showing a year-over-year decline. And in fact, Mexico actually showing a steeper decline year to date than the United States, which I was not expecting. I mean, a lot of this surprises me, thinking that China's got to be finding new destinations for their goods, new customers, and only seeing a few countries with an increase, but obviously something like Brazil, pretty large recipient of containers remaining flat. Maybe that's an indication that China has found some new buyers for some of the goods that they would otherwise be shipping to the U.S. But what's your read on what we're seeing here?
Well, the Mexico decline is steep, and yeah, I'm not sure I would have suspected it to be that much steeper than to the U.S. But if you think about it, it makes sense. Obviously, a lot of production capacity has been built up in Mexico to kind of cater to inbound container demand from China, and then final assembly in Mexico to take advantage of USMCA or NAFTA over the years. And so if you think about Mexico as being more of a waypoint for imported goods from China, as opposed to like final destination serving only that consumer market, that drop in coordination with the US makes a ton of sense. I guess, the drops to Europe, I guess, makes sense in terms of their struggles from an economic perspective too. They don't have the same tariff disincentive. But yeah, from what we have gathered, and this is definitely something, this data is super interesting because from what we've gathered, China volume is finding new places. It's just not necessarily finding them in the markets that we've tended to track so intently over the years, which is, obviously US and Europe, right? So Brazil is holding strong. Indonesia is a very interesting one. So obviously a lot of intra-Asia activity. I think this is just sort of part of this bigger picture of new trade patterns.
Yeah. And perhaps for next episode, we can bust out some of these countries with big year-over-year swings into the week-by-week view, because it'd be also interesting to see how these change. Like saying, Poland makes a little bit of sense because I think that's a lot of stuff going effectively into Ukraine in some way, shape, or form.
Yeah.
Australia is interesting to see jump up so much as well. But that may just be a
spillover, right? Like Australia is like a small US market in terms of like consumption, right? And so that may just be, hey, we don't have a market for some of this US stuff.
And Indonesia is another good spot similar to that, where you do have strong, a growing consumer strength, and it's an easy place to dump goods if you needed to.
Yeah, I was going to say, I know a couple of months ago, to go back to the Mexico topic, Mexico imports, at least when we looked at it in July, they were down overall, imports from all origins. And that could be, again, a sign of what is produced in Mexico to eventually end up in the US, or just Mexico consumer demand, spending, manufacturing, other economic indicators pushing overall imports from Mexico down year over year. Doesn't necessarily mean that they're not a big recipient of goods being redirected from the United States to go to Mexico instead, in terms of China finding alternative buyers. So
something on the Mexico thing that may be interesting for you all to look at is, like, was there a big ramp up in import volume over a number of years? And this is sort of like, if you strip out if you take the tariff impact on that China to US via Mexico stuff, maybe it reverts to something that looked like what, volume from China into Mexico looked like, 7 or 8 years ago.
Yeah.
So
yeah, absolutely. I think there's a few different glances at this. I also think we could probably just do this for April 1st to now as a, year-over-year comparison, just because I know things were very different in terms of US imports January through April than afterward. But let's pivot away from China. I know we wanted to take a closer dive into or an update into what we started in our last TradeView Live episode, which was a deep dive into US bookings. When we did our last episode at the end of August, I think the higher tariffs for India were just beginning to be enforced for goods that were arriving, or there was sort of like a window of exception that, hey, if you could get your goods in before this date, then they wouldn't be charged the 50%. We're past that point. And it looks like there's no end in sight. There's no 90-day reprieve like we did with China. It looks like both India are putting their heels down, and the US as well. This 50% tariff might be here to stay for quite a while. What do you think, Eric?
For those who don't know, India's like sort of close to my heart, probably closer than any other market I track. My in-laws are from there, and so I spend a lot of time in India. So I was actually in India when the increased tariff levels were announced, and there was a lot of confusion there about why they felt they had been singled out and in such a way. And there's been some justification from the administration on why India was targeted in this way, but there's still a lot of confusion. I mean, if you go back to the beginning of the current administration and their sort of like messaging around what they wanted to see in terms of reshaping of global trade, you would have predicted that India would be an ally that the US would really double down on as a way to sort of wean itself off of a dependence on Chinese made goods. The opposite has happened. China has just received, 90-day reprieves continuously, while India seems to have been targeted. Now, obviously, India volume is, by value, is a tiny percentage of US inbound trade. So we're talking about a country with potential to be a huge supplier to the US, but right now is a fairly minor supplier, especially given the size of the market, their economy. Being there, it's clear that there's going to be a lot of products for whom 50% tariff levels are just completely unworkable. Like, I would say a big swath of India's exports just don't work from a margin perspective if you slap a 50% tariff on them. So I think something has to give in terms of trade relations between the two countries, because it can't continue unless we've decided that we just don't want, in the US, we don't want to work with India as a big trade partner. We'll see. I wish I had more intel into like the thinking on both sides. I don't. I just sort of observe. I think one other interesting thing is there's a lot of interesting stuff going on with India and the US right now. The H-1B thing,
right,
disproportionately impacts India because India disproportionately represents 3/4 of H-1B visas. We saw some sort of anti-India backlash emerge in the trucking world based on how many Indian immigrants have come to the US and are driving full truckload and less than truckload vehicles. So it's kind of interesting to see where this all heads. I'm not really sure where it does. It doesn't feel tremendous right now, but from my perspective, but we'll see. Things change quickly. That's one thing we've learned.
Well, and it's, I think, reflected a little bit in the chart we're seeing here, which to rewind it a little bit, when we last did our TradeView live session, we were at that inflection point looking to be pretty far below 2024 levels. We see a very recent sort of uptick where we're just about equal with where we were last year. So I don't know if that's sort of a acceptance and kind of new normal where shippers are like, hey, we don't have an alternative way of getting these goods into the US, or Indian exporters are working out a way to discount their products to make them affordable for US importers. But either way, just looking at the last 2 weeks, right, a very small data sample there, we do see it approaching 2024 levels after being well below year over year for the last 5 years.
There were some exemptions, right, on certain products.
That's true. There was about 100 pages of exceptions, a very large document that was released a couple of weeks ago by CBP.
Eric, this is reminding me of a quick point we had in a conversation, you and I, the other day about these tariffs. What if the Supreme Court rules in a different way? And as Ben was just mentioning a moment ago, some of the tariffs are actually being eaten by the suppliers to keep business with different companies, et cetera. What happens if the U.S. government gives that tariff money back because the Supreme Court rules a different way? And how is that money going to get back to the suppliers, or if at all?
I think importers want the Supreme Court to rule, obviously, that the tariffs were improperly assessed. But we would literally go from chaos to super chaos at that point, I think. The point you were making, there was an interesting LinkedIn. There's so many interesting LinkedIn posts from trade compliance professionals who have literally been, it's like the guy in Office Space with the stapler, like literally locked away in a basement. No one wants to hear from them until CBP comes to audit. They've been on LinkedIn saying very interesting things. And one of them was saying, okay, say the Supreme Court overturns the tariffs rules, they have to be refunded. First of all, interest-free for a year, which is nice for these companies. But second, as I think most people have kind of realized now, the way that these tariffs have been absorbed is either the importer is absorbing them with lower margin. Their suppliers are eating some of that cost in terms of what they're charging to the importer, or prices are being raised and the consumer is eating some of them. It's probably all of the above for a lot of products. But if CBP has to refund, say, $100,000 in tariffs to an importer, and that importer's supplier ate 50% of the tariffs that importer was going to be charged, how do you get that money back to the supplier? Do you send them a remittance? Do you take it as a credit in, in future invoices. Whatever the case is, it's going to be messy. It's going to be a crazy administrative hurdle. A lot of people are going to be cash flow, there's going to be a burden on their cash flow. If so, yeah, it's chaos, super chaos.
Not to walk us back a second, but we had a question, in our conversation a moment ago about, what is the China to Mexico imports been like over time? I pulled that chart up real quick, and then I also noticed there's a question from Brian Mangelson.
Yes, I have an answer to that one. Thank you, Brian, for sharing that question. It was a question about Chinese exports overall, regardless of these top destinations. I specifically looked at the.
Well, I can show it real quick here.
You got that here? Okay.
So first, what I did here is I came into TradeView and I did the origin is, of course, China. The destination is Mexico. I'm looking at the bookings by TEU, by booking date, booking week, going back to 2023, week 32 right now. And the most recent week in here is week 38. So relatively, right now-ish, last week. So if we look at the beginning of this year starts at this column, we certainly see there was a lot more volume last year with a spike kind of early and then it kind of fades. And then it was weak beginning of the year. There was a spike around liberation or the early May kind of reprieve, it seemed like. And then it's kind of been relatively flat, maybe gradually up since then. But kind of curious, like, why would the volume been so much greater last year in general? I don't have an answer, but maybe this supports your thought, Eric, about it was much more about finished goods coming into Mexico previously, and now it's potentially more about materials coming into Mexico and manufacturing. It's been enough time to change. I don't know how much, it depends on the business, of course, but is this enough time to change? But pretty meaningful difference there. And to answer Brian's question, I'll just remove this filter from Mexico, and so we'll be able to see this is all Chinese exports to anywhere. So I will take that off real quick, and I will select, just clear it.
Yeah, just hit clear.
Pulling that up.
And this is again looking at bookings. We could be looking at finished shipments by looking at arrivals. We could be looking at departures, which is shipments that have begun. But in terms of that leading indicator for bookings, that's I'm assuming what Brian was asking about.
Yeah. So volumes is just Chinese exports since early 2023. Oh, I should not just select that one, but I should come up here and I should select the week side as well. I'll just go to relatively the same date. So we can get the date range here. So you can see the Chinese New Year's pretty much when they're happening, or Labor Days, etc. But more volume certainly in 2024. And it looks like less maybe total volume so far this year, but less peaky, perhaps. Yep. But I could also group this not just by week. We could group this by quarter or year, etc. So Brian, happy to follow up with a more detailed answer. Back to India. Product trends.
We had a few deep dives. Kyle, if you want to go back to the slides.
There we go.
These are just breakdowns of different products, similar to what we did for China to US shipping trends. We wanted to bring in some of those same product categories, again, looking at the HS codes indicated in the bookings.
While some ups and downs, it seems relatively stable for all of them.
Yeah. I don't think there's anyone that is showing the most pronounced decline other than furniture.
And vehicles is like parts and pieces, etc. for vehicles, not the roll-on kind of vehicle.
Yep.
All right, Europe to US weekly bookings.
So Europe is one of the regions where we do have some clarity, at least in the US-Europe trade relationship, as well as with the United Kingdom. So, I think that that's actually echoed by what we're seeing here, which is a bounce back of sorts. In the last 4 weeks, we're actually above 2024 levels in weekly booking volume after being below for some of the summer. While there was that uncertainty, we did not have a trade deal in place. There was a lot of posturing, even some threats in terms of retaliatory tariffs back and forth. We put the agreement in place, the details were finalized, and we're now seeing some growth. And again, a breakdown of the different industries and categories here as well. The biggest
beverages. I'm going to guess beverages being wine.
Yeah, the Heineken. I know we did a deep dive into some of the imports we bring into the East Coast of the United States, and specifically imports of Heineken were one of the types of cargo we saw. So I'm thinking a lot of liquor, beer, and wine probably represented in that beverage bounce back.
Any thoughts there, Eric?
Well, I mean, it's interesting to put that against the data showing, decreased alcohol consumption in the U.S. And that's sort of a longer term sectoral kind of.
So what you're saying is I shouldn't ask you if you're an old world guy or a new world guy in terms of your wine taste. It's more of, are you a wine taste or no wine taste?
Yeah, right. Exactly. Yeah. I think it's hitting across, whether it's from California or Spain, for sure.
And it's similar to how we had it like before, Europe to many of these destinations. So getting some details in terms of the year-over-year changes. Mostly, some Europe to Mexico down nearly 13%, 7.5% Saudi Arabia. There's some interesting ones here, but there's not a whole lot of ups per se, which has also been interesting.
Yeah, that should be. I'm going to tell my colleague in Europe to look at the export outlook in a little bit more depth, because it seems like it's fairly bleak.
So we've looked at a lot of macro views. We're a little bit over time. I know we had this technology transition. So I want to leave it on a final note, which is sort of the most recent breaking news, if you will, the announcement made by CBP yesterday afternoon, that giant bicycles will be seized at all U.S. ports based on an investigation of what appears to be forced labor allegations that were found to be credible enough that giant bicycles will no longer be allowed to be imported.
This will be interesting, especially for like the used bike market in the United States ahead of the Christmas season, because giant bikes aren't just the bikes that say giant on them.
Sure.
They make many of the frames for many bike manufacturer or bike brands worldwide.
So to go back to Eric, your original comment about being involved in trade compliance discussions, the uncertainty in terms of, not just country to country trade policy, but now individual products that are receiving exceptions seemingly on a weekly basis, and now an individual company that has been singled out, that has been highlighted. What can we expect moving forward? More things like this? Do you think that there are other actors in the supply chain, big importers that might be called out by CBP?
Well, I think if you're importing, the regulation that ensnared Giant here was nothing to do with tariffs, nothing to do with what's happened this year, right? This has been a longer running issue of scrutiny around forced labor that everybody should be highly aware of now. I think the thing to be taking note of now is not that CBP was not scrutinizing supply chains before 2025, but you should go into every single shipment these days thinking CBP is going to be looking in some way in depth at your activity, right? Like that should just be the default assumption rather than they might be looking at this activity, especially if it's something. I think most importers felt if they did their due diligence and they had fairly repeatable patterns in terms of where they shipped from, amounts that were shipped, types of products that were shipped, that they were in decent shape, and kept records. I don't think you can make that assumption anymore. I think you need to think about patterns being a historical, CBP having all sorts of tools at its disposal including AI, that they haven't in years past, and then an administration that's highly focused on rooting out bad actors and importing. Like that should be the default assumption, that you're going to be scrutinized, and so you have a higher bar to jump over now.
And there's also an interesting relationship to maybe dig into and look into a bit more here, because just happening to have some knowledge about like the bicycle industry going back decades. Taiwan was the major leader back in the day with the bicycle industry. Much of the manufacturing around creating the frames, doing the finished bikes was happening there. This is a look at what the shipment history has been for the past 2 years for Giant as the importer. But what's interesting here is, top origin ports. I would make some assumptions that some of the analysis around the forced labor is primarily going to be looking at the Chinese market for the sources. But it's interesting to see, Vung Tau, which is in Vietnam. Actually, used to live about an hour's drive from Vung Tau. Where would Giant be able to, say, get more into compliance? And so there's a few locations, but it's really Vietnam and Taiwan and nothing else after that. And so they're going to have to figure something out. But I was also noticing that Taiwan was also a major receiver of these goods. So perhaps that's also doing more of the finished bikes for the shipment to wherever they're going to go.
Yeah.
But this Shanghai, where it's the vast majority of the volume, you might even say half of the volume for them is probably the area where the most scrutiny is happening.
Yep.
Great. Well, thank you all for attending and for going through the extra time. Eric, thank you for joining us as a guest and taking extra time with us. We'll be back at some point in October and potentially with another guest. Thanks all. Have a good rest of the week.
All right.